Assalamu alaikum. Welcome back. In the last video, we were discussing about money and credit as revision. In the last topic, we have seen terms of credit. So, terms of credit is set of conditions under which loan is given. Credit is agreement we have seen before. So, on those terms, set of conditions upon both borrower and lender agree. Those are terms of conditions. Terms of credit. And one of the most important thing in terms of credit we have seen, which is collateral. What is collateral? In addition to interest, lenders may demand collateral. What is collateral? Collateral is kind of like security against loan. So, collateral, security against the loan. Security means like if you want to take loan from the bank, you want. So, bank of course will check your economic background, whether you are able to repay loan or not, your economic condition, your background, economic background. If fair enough, if good enough, then definitely bank would like you to serve you. But at the same time, still banks ask some kind of security, safeguard. So collateral is an asset that the borrower owns and uses as the guarantee to a lender until loan is repaid. So, banks use assets as guarantee, not actual they use, but they use as guarantee. Means suppose if you want to purchase a vehicle, in that case banks definitely ask you your economic background, your income and everything, and those will check definitely. But at the same time, still you are fair enough in economical way. But what if you won't pay? You don't want to pay then. So in that condition, banks keep their name as financial. Banks keep the documents. Earlier time, banks were kept original copies of RC before, but for vehicle. But now they just mention in that official registration card financial name. In that case, banks, you cannot asset still under the bank and you cannot sell it. This is how these banks work. If you purchase house at the same house or land, banks keep the documents of house with it. Of course, banks will not use your house or land, but documents to keep for safety. Alright? So here we have seen collateral is an asset that the borrower owns and uses this as a guarantee to a lender until the loan is repaid. Once you repay the loan, that bank releases bank and other sources as well release your documents, then your assets will be free. If the borrower fails to repay, now second condition, if repay successfully, then no issue at all. But if borrower fails to repay the loan, the lender has the right to sell asset or collateral security to obtain payment. Banks definitely will send a notice and request you to repay the loan. And still, if you fail to repay, in that condition, banks have right to sell your assets for repayment. So here, next variety of credit arrangement, sources of credit. In rural areas, the main demand for credit is for crop production that involves considerable cost on seeds, fertilizers, pesticides, irrigation, electricity, repair of equipment, as well as farmers' personal needs. So those are various needs of rural areas people. In village, there may be different credit arrangements for different category of borrowers. For some people, bank is one of the credit arrangement, but not for all. As earlier we have seen, rich farmer can easily get loan, get credit from the bank. But for small farmer or for landless laborer, that next to impossible to get loan from the banks. So for different sources, for different categories of borrowers. So first, we have seen in different cases, we studied different cases of imaginary village, Solapur. So here, loan from money lenders. First category here, loan from money lenders. Small farmers borrow money from village money lenders at high rate of interest. Due to high interest rate, they fell in debt trap. Earlier we have seen debt trap. So such kind of credit makes those borrowers in worsen condition. We call it debt trap. More, loan from traders. Farmers get loans from agricultural traders at a lower rate of interest. The lenders also get the promise of farmers to sell their crops to him. Terms of credit here, apart from those payment method, repayment schedule and everything. Here, traders force them to sell their crops to that particular trader only. And they purchase, they offer them lower price than market price for their crops. So, he buys crop from the farmers at low price and sell it later when price is higher. So, this way those traders earn from both the way, from first from the interest they charges, which is generally higher, and second they purchase crops from the farmers at cheaper rate. So this way they earn as well. They earn as well. Next, loan from banks. Medium and large farmers take bank loan for cultivation and for their needs at lower rates of interest and easy repayment terms, like easy monthly installment or at the time of harvesting. Banks also provide other facilities to the borrowers. Even one loan still not repaid, that the bank sometimes give them the loan on certain conditions. Certain conditions. If regular, they repay. Loan from employers. This is especially for the landless laborers. So, landless agriculture laborers and workers depend on their employers for the loan. You are aware, this is the common. When workers they need loan, they approach to their employer and demand, like sometimes they demand loan as advance. So at the time of their giving them salary, wages, they deduct, because they are either daily wages laborer or they are permanent laborer, permanent workers to the large farmers. So their employers provide them loan money at the time of their need, and they charges higher rates of interest. And in that way, those people bounded to their employer, they cannot leave their job, their work without repayment of loan. And of course, ultimately, those people fall in debt trap. Loan from cooperatives. Loans to member of cooperative societies can be provided for the purchase of agricultural implements, cultivation and agriculture trade, fisheries, construction of house and other expenses. We have seen that cooperative societies. Here we are talking about farmers cooperative society as well as traders cooperative societies. So those societies give credit to the members at reasonable rates of interest and fair terms of credit. One more here example we can take that Krishi cooperative is cooperative that functions in a village near Sonpur, as we were talking about the Sonpur village. It has 2,300 farmers as members, 2,300 members. It accepts deposits from its members. With these deposits as collateral security, the cooperative has obtained large loan from the bank, somehow similar to the SHG, self-help group. These funds are used to provide loan to the members. This is how the cooperative societies function. Credit sources in India we have discussed before with the help of charts which I provided in the description. There are links in the description box. So kindly download those links and check the various sources of credit and portions in India. So here credit of sources, those various credit of sources we are categorized into formal sector of credit and informal sector of credit. Banks, cooperatives, registered financial organizations, those are informal sectors of credit. Informal sectors of credit, money lenders, friends and relatives, as well as employer, trader, merchant, those are in informal sector of credit. So let's talk about features of formal sector of credit. It provides loans comparatively at lower rate and collateral security is required to obtain loan. First point we can count here for formal sector of credit, they charges lower rates of interest. Second, collateral is mandatory for obtaining loan. This sector mainly supervised by the Reserve Bank of India. Next, it includes banks and cooperatives as well as other registered financial organizations. Those which are not banks but they work as creditors like Muthoot Finance Limited, Bajaj Finance Limited. Right? Those are not actually banks but they provide credit for various purposes. Most of you are aware about it. Bajaj Finance nowadays popular among rural people among the rural area as well as urban area, especially for the consumer products, electronics goods, mobile phones. Right? So Bajaj Finance Service is not a bank but financial service organization which provides loan for various purposes. So that also in formal sector of credit. Role of RBI in formal sector. As we know that RBI supervises on the formal sector of credit as well as we have seen before RBI is like the bank of the banks and the bank for the banks, we can also say that. So RBI has major role in providing formal sector credit. Its role stated in the points. First point, the RBI, full form, the Reserve Bank of India, ensures that banks give loan not just to profit-making business and traders, but also to small cultivators, small-scale industries, small borrowers, etc. More, periodically banks have to submit information to the Reserve Bank of India on how much they are lending, to whom, and what interest rate they are lending to the borrowers, etc. report they have to submit to the RBI. They means formal sector banks, cooperatives, right? They have to submit. The banks maintain minimum cash balance. As we have seen, some part of their cash deposits banks keep as cash deposits. So this level of cash deposit, that percentage of cash deposit mandates by the RBI. So RBI mandates this portion of cash deposits, minimum cash balance out of deposit they receive, percentage. The RBI monitors banks in actually maintaining cash balance or not. So those are the main functions of RBI. We can add that RBI also provides credit to the banks when they are in need, when banks require. That is also one of the important features. Now, features of informal sectors. Informal sector charges higher rates of interest on the loan. Second, there is no obligation, no supervise on the informal sector of credit, unlike formal sector of credit. Collateral security is not required to obtain loan, because mostly those informal sector provide loan to the people those whom they already know. So collateral is not necessary. One more thing. Here, this could be lead to increasing debt with the borrower and can fall them into debt trap. Sorry. One more thing. They do not collect collateral. They don't need collateral, but they also use that sometimes unfair means for repayment of the loan. People who might wish to start an enterprise by borrowing from informal sector may not do so because of higher cost of borrowing. But still, poor people and from urban area as well as rural area depend upon the informal sector of credit, as we have seen earlier in the charts provided to you. It is essential to reduce informal sector of credit and increase the formal sector of credit in India, because we know that cheap and affordable credit is crucial for the development of the nation. Last here, self-help group we have seen. Self-help group is a small group. So this group of people usually belonging to neighborhood having same social and economic background. They meet and save money regularly as per their ability. Members of group can take small loan from the group itself to meet their needs. They don't need to go to the money lender or other informal sector of credit for their requirement. They can take means they can borrow money from the self-help group itself. The group also charges some nominal interest rate, right? But which is too less compared to those money lenders. It's kind of equivalent to the banks, or sometimes even lesser to the banks. After 1 or 2 years, if group is regular in savings, it becomes eligible for availing loan from the bank. Loan is sanctioned in the name of group, and it means to create self-employment opportunities. Many states of India have women's self-help group, like Gujarat, Karnataka, Andhra Pradesh, especially women in rural area and even women. So self-help groups also help women in other way as well, not only in the financial matter but other way. Like as we know that they conduct meeting, I said that they meet regularly. So they discuss about other issues as well, like job opportunity, social issues, education, health, growth and development of children, domestic violence. So certain issue they also discuss in their meeting. So this way that self-help groups are important for women. So here our recent session is over. Next session I'll discuss with you about question answers. Stay tuned. Thank you so much.